Ladies and gentlemen, so let's have a casual conversation, I think, about where we were, where we are, and where we're going, and how this reincarnation is taking place. I'd like to direct the first question to Michael Terpin. And Michael, what's your sort of honest insight into this? Is this decentralized global financial system, is it a possibility to make the world a better place, or that's just a utopia?
That's a very broad question.
It is, yeah.
I mean, I think for the most part that we're in a market, right? So markets ebb and flow. I mean, the stock market, the gold market, and particularly early markets. In the beginning of the oil market, there was wild fluctuation. I mean, 100x and then crash of like 90x, or kind of right back to where it started from, because people weren't certain whether petroleum would ever be taken seriously against whale oil, right? And obviously it did, but you had like some highs back in the 1840s that make today's oil prices on a basis of today's dollars look like you'd be paying $100 a gallon for gas. And I think we saw some of that in the early days of crypto, right? So in the first 4 years, you had lows as low as I don't know what it is, or a tenth of a penny, and then it went all the way up to $30, and then crashed pretty quickly when they saw Silk Road maybe wasn't going to take over the world, back down to $1, and people were panicking that they were holding $30 Bitcoin. Had they simply gone in and just bought, cost averaged out and bought $30 at $1 and had their average price be like $2 or something, they would have been very happy. But markets are about fear and greed, and I think that obviously Tone is a friend. We can drink and have good meals together, but we're philosophically at diametric poles. I believe that blockchain, while created by Bitcoin, and Bitcoin is still the greatest asset for many use cases, and it's probably the only one that's completely useful in terms of the government's never hacking it. I believe that there are other innovations that are out there today that are better implementations than Bitcoin for specific projects. Stellar obviously is very quick. And I can go into a whole long list of things that have their usefulness. And like Silicon Valley, 95% of all startups fail. And the ones that don't fail, maybe only 1 in 100 become like the next Ethereum in terms of market value. So I just think we're in a market, and I don't think it's all about what's going to change the world. The internet was supposed to change the world in the 90s, and it ended up just becoming dominated by 4 big players. It still changed the world, but it didn't change the world in that, like, hey, speech is now free throughout the world, and everything is run by like a utopian universe. It's run by the stacks on top of Bitcoin. Sorry, on top of internet.
Yeah, but 5 years ago, like, we didn't have Uber, and when we, as that brand built itself out, we now have a totally different experience in getting a taxi. So I mean, are we going to see something like that finally take place in this industry, aside from the digital store of value, which was BTC, and of course the phenomena of borderless crowdfunding, which was Ethereum, and these sort of use cases?
Yes, I believe that you will see any problem that can be solved through a tokenized system. It doesn't even have to be a decentralized system. There will be private blockchains that you still use public funding mechanisms once they sort the laws and jurisdictions out. There's no reason why there shouldn't be a either decentralized or semi-centralized, but in any event, tokenized Uber that is member to member, however the governance of that is, that could effectively compete against Uber. It's not easy, just like it wasn't easy for Facebook to beat MySpace. It took MySpace, selling to Fox, and then Fox just completely messing up their first mover advantage. But there's very few market leaders that stay market leaders for long periods of time. If you look at the top 10 coins of 2013, I mean, you had things that just don't exist anymore there, or that are just, you know, hardly anything other than Bitcoin and Litecoin. And if you look at the Fortune 500 from 30 years ago, you see companies that no longer exist, and obviously they're now dominated by companies that didn't exist then. 30 years ago, 20 years ago, there was no Amazon, no Google, no Facebook.
Now, Tone, I know you want to jump in on this.
Yeah, a couple of things. I really like the oil analogy, and I think Bitcoin is one of the first things to resemble what happened with oil in the late 1800s, where you had this black stuff in the ground that was a disaster. Like, it's the last thing you wanted to see if you stuck a shovel into your land. And then all of a sudden it went from being a negative value asset to a giant positive value asset. Because in the very first days of Bitcoin, it had no value, but you had to spend electricity in order to get it. So Bitcoin was also just a negative value asset. You had to create it at a loss of using resources. So that's a great analogy. And look, we're still using oil today. It's been 100 years. And it's, I'm not going to say it's as valuable as ever, because the renewable energy is coming, and eventually technology creates something new. And I'm praying that Bitcoin has the same longevity as oil for its usefulness going into the future. Now, the other part you guys were talking about was this decentralization and this concept of companies. And that's the other part that I want to separate. If I'm comparing Bitcoin to oil, Bitcoin is not the Model T car from Ford, you know, back in 03, 04, I don't really remember. But the point is, Bitcoin should not be compared to a car that uses oil. Bitcoin should be compared to the oil. Bitcoin should be compared to the engine. Bitcoin is what revolutionized transportation and many other things. Meanwhile, all of these things that are competing in the crypto space, from platforms like Ethereum competing with EOS, competing with Tezos, competing with, you know, Tron, whatever. Platforms are competing, other currencies are competing, tokens are competing. Those have more similarities to current companies than to the actual internet itself or oil itself. And the final comment I want to make is this concept of decentralization. Decentralization is grossly inefficient. And I find it very difficult to see a future where a decentralized Uber can compete with Uber unless Uber is banned in that jurisdiction, right? Because then the decentralized Uber has an advantage. Decentralization is so inefficient that the prior two examples of decentralization, one being the privacy browser Tor, was pretty much almost dead if it wasn't Bitcoin reviving it because it was so slow and no one was using it. And the other is file sharing and BitTorrent, which was also dead because the centralized way to get you music and videos became cheaper and faster and less virus prone and just easier. And I know it totally died because a scam bought them out, like an ICO scam, right? So it's Tron. I really don't like that project. So decentralization is hard. It really is.
Lawrence, what would you add to this?
I'd like to address the decentralization part. So why do we need decentralization? Is it to protect against some sort of attack? And what is decentralization really? Is it just making things expensive in order to take over, or, you know, in order to change, in order to reverse, in order to attack? Or is it a facade to avoid regulation? Or is it a facade such that people can issue tokens or assets or securities or almost securities? Like, I really don't understand the idea of utility tokens. Like, a utility token for the centralized Uber for me doesn't make any sense. Why would I want a Uber token? If I can choose between getting paid in Amazon gift cards or Bitcoin or euros, I probably get Bitcoin and euros and then Amazon gift cards. Like, Amazon gift card is the last thing I want if I can have something, you know, easy to trade. So
but Amazon gift cards still have a stable value. They're worth US dollars, right? So they're very similar to US dollars. It's not it's not going to change in value, just harder to move.
An Amazon gift card that fluctuates is even worse than an Amazon gift card. So if you had a utility token, a Uber utility token, that was, you know, traded and I don't think.
But Amazon actually pays people in gift cards in parts of the third world, and then they go in and use something like Purse to get Bitcoin out of it.
You read that?
Amazon does pay people in their token, but their token is basically, it's like paying them in US dollars, right? Like the financial value of Amazon token is pegged to the US dollar.
Right, but they lose money when they convert them. When they try to sell this gift card, they have to sell them for cheaper than Amazon sells them. So they're going to lose some value there. Now, do you really want decentralization for something like Uber, where you need reviews, where you need to know that the cab picking you up, it's not someone that is just going to mug you? What you usually use decentralization for is to protect in case of attacks, but also to have anonymous entry in and out.
I had made a point when talking about the Uber that if, and again, Uber's got a huge, leap over everybody else, so does Facebook and social networking. But, sometimes when you get to the top of visibility, you have now the Democrats, if they get one of the socialists in power, they want to break up all the tech companies, et cetera, et cetera. You then have an opportunity for somebody really bright to go and do a tokenized, not decentralized. I agree with you. I first of all agree with you that Bitcoin is more like oil and everybody else is more like companies, but I don't think that it's the decentralization, it's more the tokenization that allows these things by eliminating various levels of inefficiency that have to do with them having to make a certain amount of profit to go and give to their shareholders, et cetera, et cetera. Whereas if you have something that's either a foundation approach or even just a thinner company approach that's tokenized, there are certainly, I believe, in the future companies that will, or entities that will be able to have a combination of tokenization rather than decentralization, and maybe some, distribution that will have some advantages, but it's certainly not a replacement for Bitcoin. Bitcoin is still the oil. It's the thing that everything else trades against, but it still has value, just like Facebook stock has value.
What's the utility of tokenization here? Is it just to raise money, or what's the purpose?
Isn't it to cut out the middleman?
To cut out the middleman, yeah.
Still, your token, and I wanted to ask you to actually, if you can go in detail into these types of things, Michael. We're witnessing a wave of companies right now that do thorough KYC and AML for their clients, for potential investors that want a shorter return time, but perhaps a less of a yield on their investment. But by these companies tokenizing potential real estate firms, development firms, whatever it may be, even small bakeries, and giving that asset to their investment, private and public investor pools, they're able to get the funding. Is this sort of tokenization business model, could this also pave way for more mass adoption?
So you're talking about, when you're talking about a bakery or something and having equity, then it's a security. And right now, even though there's still a lot of disagreement in different governments and jurisdictions, what you can and cannot do with a consumption token, I think utility is a bad word for it. It's a government word. I mean, it's a consumption token, something that you're buying to consume. You're going to buy something with it within an ecosystem. And they work best when it's an ecosystem of thousands of companies rather than just for the benefit of one company. But we're still really, really early in this model. But a bakery, is not going to be able to go and, effectively currently. Now, you need to have where, in the internet, they had a lot of these small kind of venture markets that spawned, like the AIM in England and the Toronto Stock Exchange, like venture arm, where you had sort of like, what used to be called penny stocks, but they had a little bit more kind of juice to them because they were internet stocks or whatever, and so they'd be the kind of high flyers. They were higher risk, higher reward, but they were still regulated, but they were regulated a little bit more lightly because of the size of the market. And, I think that'll happen when you have restaurant chains that raise from their own customers under the equivalent of what a Reg A Plus is. It's just that there's no real easy way to do that right now, and the public is not educated as to why the heck they might want to do that. That's probably going to take exchanges going in and saying, NASDAQ's going to go and have a tokenized security market. And they probably will, because they'll make money on it. But it's not here yet. And until you have the underlying exchanges to provide liquidity, I don't think that security tokens are going to do well for anything other than funds and, royalty situations like, film financing. But other than those very small use cases, I think that the growth for the next year or two is the return of the consumption token market. And, you know, $1.5 billion so far this year in IEOs, you know, it's not dead.
And the point I wanted to concentrate in that, though, is cutting out the middleman, right? Where you're able to give that bakery, be it a bakery with a good following, you know, 30 years in the business, an ability to kind of go IPO, if you will, right? By tokenizing the asset and putting it on a tradable platform.
Yeah, you're kind of mixing metaphors a little bit on that. If it was a bakery token, to use sort of the laundry token SEC analogy that Clayton was using, you know, and you were using this bakery thing to like have one group of people make cakes and get paid in the bakery token. I'm not saying this is a good idea. That would be a consumption token where across all the bakeries in the world, they could go and be part of this bakery token for contributing to, like, you know, baked goods. If you have a just single store who's trying to expand into a second store and you're giving them equity, that's more of a, that's not about cutting out the middleman. That's about simply self-funding and using a tokenized environment to do that. And I think right now, I talked a little bit about that with the hybrid token, where you could go and give sort of loyalty points on the blockchain and have it on an app to your shareholders. It's still a security. We're still 3 to 5 years away, I think, from that being viable to the mainstream bakery.
Right.
So,
Lawrence?
Well, I was thinking that ultimately the middleman or the friction that we have today is not due to technological reasons. It has nothing to do with technology. We can do that already today with no blockchain, with no tokenization whatsoever. You know, you could just buy directly from the issuer. At the end of the day, you're trusting the issuer anyway, right? So there's no reason why, other than regulation and the current status quo and the rules, that you know, there's no other reason other than that, you know, for which we have the middleman. So I'm not sure that tokenizing things is going to remove the middleman necessarily. It's not going to remove the regulation. The regulation maybe is going to come in different ways or in different forms, but...
Gentlemen, now speaking about regulation and that definitely being a part of the reincarnation of the industry, what must take place for all of this to align? For, let's say, views such as Tone's and views such as Michael's to align, because it's there. The base core technology is there, and the experimentation and this innovation is also obviously there. So what can we do to come together and make this space better?
Well, to me, there's nothing, like, you can't come together if, like, people, sometimes people want to, well, we can compromise on this. Well, some things you just can't compromise on because they're incompatible. Bitcoin itself is a decentralized protocol that is non-regulatable, right? Like, you can't regulate the composition of, like, again, going back to the oil analogy, you can regulate how you can use the oil, but you can't regulate the oil itself, right? It is what it is. It's this black stuff that comes out of the ground. And so my view on this is the regulators, whether it's the current regulators or the next wave of regulators, they're going to get a handle on this because every one of these tokens is a centralized entity. They're not as decentralized as any of them claim, and they're not sitting on top of decentralized blockchains like a lot of them claim. And my view on it is, look, you have to separate what kind of a token it is. What bothers me is utility.
Can Michael jump in really quick?
I was going to say, that's never been part of SEC law, decentralization. It's been in their guidance, and you know, Clayton has said there's no need to rewrite the Howey test. We'll just do the Howey test. The word decentralization is nowhere in the Howey test. Neither is the ability to go and have to have something already built and it becomes this and that, whatever. I mean, if you look at
agree. We agree there.
Yeah, because wine futures, you're going and giving money. The Howey test was actually an orange grove company that basically tried to use the wine future model for their oranges. Unfortunately, if you're going and giving them money for their orange crops, you can't get a delivery of the oranges because they rot, as opposed to wine goes up in value because it actually is a product. So when you're buying wine futures, you're giving an investment of money, you have no say in the company, you have an expectation of profit, but the reason it's not a security is because you get the bottle of wine, and if Robert Parker likes it but the company goes out of business, the wine price goes up. Whereas the Orange Grove, they gave you a dividend, which made it a security. Nothing in the law, nothing, if 1946 Supreme Court case interpretation, nothing in there, nothing to 34 Act about decentralization. This is all just stuff that the SEC is doing to kind of like hey, before we actually have hearings and make laws like we do with everything else, let's just scare people out of the U.S. And that's what's going on.
Yeah, no, and that's, yeah, no, I mean, I agree with you on that, but those laws can change. And the point that I try to make is Bitcoin is going to stay decentralized if it's going to succeed. And, but the rest of it, there will be a handle on it. And if you are doing a token or you're looking to get into a token, I just don't understand how any token can serve as any functional utility when it fluctuates in value for your product. We've had utility tokens for years. Casino tokens are utility tokens. Airline miles are utility tokens. And that's fine. And some people get paid in their company stock as a bonus as well. And that's very, very
Pork
different.
bellies that fluctuate.
Right.
You know, and it's still the same pig.
Like,
so.
you are running a horrible business if the thing people pay for your product in changes in value every second. And it just makes no sense to me how so much in the blockchain, people in the crypto space think this is a good idea. It just like drives me insane.
Well, it's a commodity. Most utility tokens or consumption tokens are commodities, and I guess then you think that you know, people who are pork belly, you know, traders and people who basically do options on pork bellies have a horrible business model as well.
Well, they're just speculators.
Yeah, but there are
Lawrence,
people who
please.
actually make.
They're
There are
speculators.
people who grow the pigs too.
No, but they want those markets to stabilize the price of the pig. They want to sell the price of the pig forward to have more stability, not less.
Lawrence, what would you add? And if I may, as you do that, we have about 2 minutes left, maybe even less. I'd like to start with you, then Tone and Michael. Just 1 or 2 sentences on your wish to the public. What can the community do better now to stabilize, equalize, create, progress, not digress?
Yeah, so I generally agree with Tone. We don't really need the utility token for many things, but there are some things that fluctuate, like SMS rates or minutes. You can buy minutes for different rates, different days, and they're like a utility token at the end of the day. And maybe the you know, mobile operators and whatnot are doing that just to make more money off of you. Back to what people can do to improve, or you know, it's not just because it's on a blockchain or anything that now it's you know, you can do whatever you want. So just make sure that you play it safe. You try to understand the rules before you throw yourself out there, and yeah, try to avoid scamming people.
Yeah, but the value of those minutes is set by a centralized company and not, you know, pump and dump groups on Telegram, right? Like, there's a difference there.
Yes.
So-
That's because it's not tokenized yet.
Right. Tone, and your wish to the community.
Oh man, hodl Bitcoin. That's my wish to the community. Understand why Bitcoin is different. Understand why it's unique. Understand why it's innovative, and stay patient. You know, Rome wasn't built in a day. Bitcoin will not solve all of your problems in a day. It may never solve all of your problems. But the fact that Bitcoin is a little slower and a little more expensive and harder to change, that's what creates this confidence in Bitcoin, because it's trustless. Like, the things that people demonize Bitcoin for are actually its greatest strengths.
Great. Michael?
So pump and dump is not unique to altcoins. I mean, you can now see in this current run-up things where all of a sudden they can track that, you know, 25,000 Bitcoins went to this one exchange, and then they speculate that the same person then bought them back and made $15 million. We don't know who that is, but we know that it's probably what happened. So, you know, I think as CTFC, I mean, they could be regulating a lot more and basically going to, I mean, the FATF, when that goes through, and you're going to have every exchange identify who the person is that you send something to in a wallet, that may, you know, make it harder for people to manipulate exchanges. Ideally, they don't say that all wallets have to be identified, because that really cuts to the sort of pseudonymity of Bitcoin if you have to register as a bank account every single wallet in the top 20 countries. So stay tuned to that space. You know, I mean, we certainly are not out of the woods in terms of even Bitcoin. You know, Brad Sherman out of California every couple of months comes and says, ban Bitcoin, make it criminal. India, apparently there was floating around something 10 years in jail for possession of a Bitcoin. I'm told that was a little bit of fake news. But they certainly have done it where you can't have anything more than $20, so they may still go, sour on possession of Bitcoin in the world's largest country.
So what would your wish be to the community?
I think, well, the community or the general public, I think basically the community needs to
The
go
planet.
and educate the general public about, let's start with Bitcoin, about how it's a really good enabler of the several billion people on the planet that don't have access to banking services, who are able to then be able to get their own financial sovereignty, just like they had thousands of years ago when they had the ability to be able to hold gold in their own storage container or their own fur pelts or whatever. And then in terms of stuff that's not Bitcoin, look, in the early days of the internet, you were considered a scammer if you put an ad on a website, because the internet should always be free. Advertising was the devil. I literally even had reporters that would refuse to write about a company if they were involved in advertising on the internet, because I was told, is it moral? And now it's like, what powers the internet? It's advertising. So these things change as use cases evolve. I don't think that 10 years from now, the majority opinion is going to be everything with Bitcoin's a scam. I think the Bitcoin is still going to be the predominant token, though, and you're not going to have a flippening to something else. But I could be wrong. It's the market that speaks.
Well, it looks like the future is certainly uncertain, but yet certain. So give it up to these futurists, Lawrence, Nahum, Vays, and Michael Terpin.
Thank you.
Thank you so much.
Thank you.